Welcome back, guys. This is going to be our daily cryptocurrency market update, and we've got quite a lot to get through in this video. We're going to be going over some really important data points coming up. Bitcoin is really at a key level right now. 22K. Really, we need to establish ourselves, or Bitcoin needs to establish itself at either the right side of 22K or the wrong side of 22K. And that's really going to determine the next range moving forwards in terms of the price. Now, it's kind of flirting with that level at the moment. It's holding it. It's losing it. I'm a little bit more biased to the fact that it's going to hold it. But ultimately for me, and one thing that we try and really impress on people in these videos is that it's almost like we're waiting for an impending doom for markets. And that's kind of what we're going to be talking about in this video. Not the best and the most cheery way to start things off, but I really want to keep things real with you guys. I get a lot more likes on the videos when I'm super bullish than I do on the ones where I'm somewhat bearish in the short term. Doesn't really bother me a great deal, that sort of interaction. Really what I care about is being honest and making sure that you guys sort of know what lies before us. And that's what we're going to be getting into in this video, because essentially we are going to find out for the US, and it will be echoed for other countries like the UK and many other countries, whether we are in a recession on the 28th of this month. Not only that, we have the next rate hike for the Federal Reserve, or from the Federal Reserve, coming up on, I think, the 26th or the 27th. This is going to take more liquidity off the table. The real debate at the moment is it 75 basis points or is it 1 point? Or one whole percentage. So is it 0.75% or is it 1? Either one is bad. It takes liquidity off of markets. What moves markets? Liquidity. And people are saying, lots of people going, oh, well, you're wrong, Look, we've been out of the market, not completely, but certainly starting to get out of the market really since your low 44Ks or 40Ks. And it's paid us to do so. And I still, even though we're seeing a beautiful move here for Bitcoin, and it's great to see, I'm maintaining a very cautious bias, because this is essentially approaching. And what I'm going to do, and I'm going to revisit it, and we've made videos solely on the NASDAQ talking about this point, is how is Bitcoin going to react in a recession? How is the NASDAQ going to react in a recession? Well, we have prior data for that. We don't have it for Bitcoin. And we're going to dive into that in this video. I also really want to stress the fact that the last time the Fed got to a 2.5% Fed fund rate, they essentially imploded the repo market, or the repo market didn't implode, it just clogged up to the point where nobody was lending any money. 75 basis points, which is a given at this point. The real question is it 75 or 100, not is it 75 or less? So 75 is a given that we're at least going to get that. Is going to take us to that 2.5% area. Typically, things break at that. The dollar's having a bit of a rest. This is very supportive for the likes of the NASDAQ and Bitcoin at the moment, and crypto. But ultimately, the kind of pressures and the powers that be are very much still in place. And I think that, once we get the kind of signal that we are in a recession, do we act similarly to what the NASDAQ does going into this kind of a period? And we're going to talk about that in this video. But let's just read a little bit of this article. This was wrote by Joe Thomas, not somebody I'm familiar with, on Medium. We'll know we are in a recession on July the 28th. And it essentially says, where were you in 2008 when you realized you were living through a major economic recession? Did you learn anything from the past period of your life? How do you feel about the economy right now? In any case, it seems that a recession is upon us. Now, I have to admit, I would have been not very interested in being in a recession back then, because I was obviously a lot younger. So it's not really something that, I'd have paid much attention to. But certainly, you can learn a lot from history. I think looking back is, history holds a lot of the keys to life, I think. There's nothing really that new under the sun, and you can kind of get a good reference and benchmark of things looking at prior periods. And I've certainly done a lot of studying into 2008, what caused it, and all the dogma around it, and also the dot-com boom. And I think, are we moving into that kind of an environment? Well, that isn't a good look for the equity market, the tech sector. Certainly, I don't think going to be a great look for the cryptocurrency market. And there is a sliver that, okay, well, if we move into a stagflationary environment, maybe Bitcoin does very well as an alternative currency, but that is really for another video. But how do we know for sure that we are in a recession? Economists have defined what it means to be in a recession. Generally, an economic recession is where there are 2 consecutive quarters where gross domestic product, or GDP, declines. Last quarter, we had a decline in GDP. So if GDP continues to decline this quarter, then we will know that we are in a recession. The Bureau of Economic Analysis, BEA, will soon confirm if GDP has declined for a second consecutive quarter. The Bureau of Economic Analysts is the agency that will confirm and announce that a recession has started. The BEA will give us an estimate of the GDP, an advance estimate. The BEA will release an advance estimate on July the 28th for GDP of the second quarter. If the first 2 quarters are both negative, then we will know for sure that we are in a recession. So I believe we're already in one. We're just waiting for the stats. We've already told you what is typically meant by being in a recession, 2 negative quarters. It very much looks like that, we're in that kind of a stage. And how do we know what crypto does in that kind of an environment? Really one thing that you've got to think, and we'll cover the move that it's currently having, is, let me pull up the NASDAQ here, or the NASDAQ composite. Bitcoin was born here. Make this very apparent for people. Yeah. Markets have just gone up since then. We've never had a period like this, or like this, to really contend with. Bitcoin was actually born out of the 2008 financial crisis. Satoshi famously quoted in his white paper the fact that, you had that news headline. Was it the Times or the Telegraph? It might have been the Telegraph, that were essentially talking about banks are doing their second round of bailouts. And this is one of the reasons why we're creating this alternative currency, because the one that we have cannot be trusted. And one thing I really want to stress is where we kind of are at the moment. You can see how you always interact with this 200 EMA. You always bounce off it. And we've been saying this, and we've actually been saying to expect this. Look at what you're currently doing. Can this continue? Absolutely it can. But ultimately, I think, given that we are moving into recession, given all the pressures and the powers that be, and the turmoil around the world, really, we've still got this situation going on. We've got a number of things taking place. Does this play out again? That's the real question on my mind. And this is why we maintain the kind of bias that we have on this channel, that you guys need to be very observant of this and bear it in mind. Because yes, we all want to buy crypto, and we are going to do that. That opportunity is still very much at hand. Could this be the bottom? It could. I just do not think that is the case. I think this is going to be a relief rally that gets killed off. I think if you look at the shorter term structure for Bitcoin and the cryptocurrency market, it doesn't fill me with a great deal of confidence. That being said, if we start to get above 23K and we start to hold and we start to then climb again, this is where we have to check ourselves and go, okay, we've been wrong on our short-term bias. Let's now switch and then bearing in mind the mid to the long-term bias and the short-term to mid-term, I still think downside. And I think, markets are very likely to start selling off towards the end of the month. This is what people don't realize. Markets aggressively price in anything. News, interest rate hikes, whatever. But the problem with pricing something, it's like the CPI data. We got the CPI data, okay? Markets started to tank and then they rallied. And people are going, oh, well, hang on. Surely that should have been a capitulation event, And it's not the actual CPI data that's the issue. It's what comes after that. It's what comes as a result of it. And the Fed have kind of come out and said, well, we don't necessarily think that we're going to do a point, but we might do. And does it make a difference? And it's been a lot of contradictory data. But for me, the main sort of view that I have is if we enter a period like this, how is crypto going to react? And I think the answer really lies in looking at the correlation so far between the cryptocurrency market and the equity market. You can see how apparent the correlation is. And we can actually drop down the time frames just to really, really highlight this a little bit more. Do we decouple? Well, we have indicators that we can look at to determine this, like Bitcoin against the NASDAQ. So Bitcoin's actually seeing it raising its head right now against the NASDAQ. That's a good sign. Does that hold? Maybe, maybe not. We will see. It's going to be very interesting moving forward. It's always an exciting time for me being in the crypto space, even when things are somewhat bearish, because it's all data that you're learning that's going to improve you as a cryptocurrency investor and connoisseur. And And, you know, there's a lot going on. So we'll finish this little last paragraph off, and then we'll talk about a few more things. Also, Rune had an update. So they've officially now got their own native token. So you can transfer your tokens from P2 tokens, so Binance tokens and ERC20s, now to Thorchain's very own native token, which I think is fantastic and explains a lot of the move that they've had. I've been trying to short Rune, if I'm being honest, quite aggressively, and been getting stopped frequently. But this is the nature of the game. There is a chance that consumers worrying about a recession happening could actually cause a recession. In other words, if lots of people spend less because they are uncertain about the future, then GDP goes significantly down. GDP will go down on the back end of interest rate hikes. You know, if you understand what's going on right now with interest rate hikes and the dollar and liquidity, how does that give any kind of a bullish outlook? You know, you've got to remember, and we've said this, and we're going to continue to say it until we're blue in the face. Let me get rid of Bitcoin here. March 2020 saw mass liquidity, not just pumped into Bitcoin, pumped into all markets. This is why you had this run. Okay, yes, there's the element of the 4-year cycle theory, but it was heightened as a result of this. This is the opposite environment that we are now in to what caused this. And it's natural that you're consolidating in this range. Like I say, you come and break this, you could do something like this, but then ultimately does that, you know, there's many ways that this can play out, you know, but it sounds like a cop-out, and I hate it when you have another analysis that go, it could go up or down. We're not necessarily saying that. Of course, there's always two sides of the coin, but what we're saying is, even if it goes up in the short term, given the environment that I think we're now moving into, it's likely to come back down. You know, until we see that pivot from monetary policy, until we see that pivot in a kind of geopolitical, economical way, there's no reason to flip bullish on Bitcoin here and expect this to be a sustained bottom of the market sort of time. You know, I don't think this is the bottom of the market at all. And just dropping down the time frames, removing all the squiggles that we have put on, you know, this is range bound. This is why 22K is such a key level. Okay, we'll use this. Can you see this? And you've been battling with it. You know, this could be a deviation. You've come up, you've hit your head. I was kind of expecting that, but now you're coming back, you're popping above it. And if you do the opposite to what the deviation would imply, you know, you've got these levels here that you'll take out. You come up and hold this. Once you get past 23K and you can hold that, okay, then you're looking at taking in and filling in some of this. And then we have to sort of reassert and go, we'll start looking for longs. But ultimately, I think that, you know, it comes back down, and we've not made that price action yet. You know, the real issue that we've had, and we've always said this is likely to turn out into a bear flag. This is just range bound. The real kind of scenario that you're potentially looking at is, you know, is this a flag that's now setting up? Is this some sort of a bear flag that's now setting up? I think that's probable. And you're very much adhering to the kind of principles of a bear flag here. You know, if you look at the kind of wider trend, it very much makes sense. But that's really all I've got for you in this video, guys. If you enjoyed the content, a like is always appreciated. So as a comment, and I'll catch each and every one of you in the next YouTube video. Thanks a lot for watching, ladies and gentlemen. I'll see you in the next one.